Hello friends, today we are going to discuss commercial loan underwriting, CRE and C&I mortgages. When it comes to CRE, that stands for commercial real estate. C&I stands for commercial and industry. What will be our focus? Our focus will be differences between CRE and C&I, and to understand what exactly these transactions are, what are these products, what are these loan programs, right? And what are the differences between both these programs, right? Before we start or we understand what is CRE or let me tell you a story, okay? I wanted to buy this home, right? For a rental purpose, means I wanted to invest this property. I wanted to purchase this property as an investment, right? And then we'll rent it out to someone so that I can earn money from there, from the rental. I can earn rental income. On the other hand, if you can see, this is the one property which I also wanted to buy, but not for renting purpose, but I want to set up here a factory. Okay. Now, to buy these two properties, I need a lot of money, right? Which I don't have. I can put some money, I can invest some money, but I need almost 80% and 80% here. Means I'm good to put 20% down payment on both properties. So what I need to do, I will go to a bank, right? And will ask for the money. Now, for this property, because let's say this property value is almost 500,000, right? And I'm asking them to pay me at least, 400,000 loan here. This property is almost 1 million. Okay. And there I wanted at least 900,000 loan from the bank. Now, bank is asking me whether there is any tenant. So I told them, yes, I have a tenant, right? I'm already in the contract, and I have discussed that my tenant is going to pay $3,000 per month as a rent. So that is going to be $36,000 per year. Then bank is, calculating that, okay, my EMI, means my mortgage payment for this property, for this loan is almost $2,000 per month, right? Just hypothetical amount, $2,000 per month. So it's going to be $24,000 in a year. So deal is good. I will be earning 36,000, will be paying $24,000 to the bank. I can easily make the payment, right? Now, on the other hand, when I come to the right side, means for this property, right? What will happen here? I'm going to set up a store here. Let's say a garment store, right? What will happen? Because I'm not going to rent it out. It will be my own store. I will be, it is going to be a retail store. Lot of, accessories I'm going to put inside for sale purposes. I'm going to sell all the items in this store, right? So in this case, what bank is asking me? Bank is going to ask me, okay, show me the balance sheet, right? Your profit and loss statement and cash flow, etc. Right? Why? Because here I'm not going in this previous property. In this property, I'm going to rent this property out. So rental agreement I need to provide, right? Because to pay whatever the money I'm gonna pay, the source of that income is coming from the rental income. So the rental document means lease agreement and rent history, rent roll, those kind of document I need to provide to the bank. On the other hand, right, when I'm going to set up a retail store for myself, right? So money will be generated, I will be making money not from the building, but from inside it. Whatever I'm going to put inside the store to sell it out, that whatever income I'm going to earn from the sale of those products, that is going to be the source of my income, right? So whatever the profit I'm going to earn after selling the products, right? That those documents which going to keep the records, I need to produce to the bank to show my profit, to show my earning, and to pay back. Let's say I'm 900,000, my EMI is going to be, let's say, $10,000 per month, right? $10,000 per month. Then I should have enough profit, enough cash flow from this store, whatever the product I'm going to sell. It should have enough money, right? Enough cash so that I can pay this 10,000 EMI, right? So let's say from my cash flow, I'm able to show that, okay, each year I'm going to make profit of at least maybe $150,000, right? After selling all the products, after paying all the cost for those products, right? All the other expenses that we can see later, how to review the balance sheet or how to review the cash flow, how to review the P&L, that we are going to discuss later. But whatever the income I'm generating or that business is generating, from there I'm going to pay all the EMIs, all the mortgage payments for this, right? So now remember, whenever I'm or the repayment of loan, right, will be depending on the product, or will be depending on the cash generated by a business, right? Then those kind of loans are going to be C&I loans. Okay, those kind of loans we are going to consider as C&I, commercial and industrial loans. On the other hand, if the loan repayment, source of loan repayment is going to depend, primary source of loan repayment is going to depend on the rental income, right, earned by the property, then it is going to be CRE, commercial real estate loans. Is that simple? Right? What is the difference between CRE and C&I? So whenever I'm going to purchase, I'm as a business or as an individual, I'm going to purchase a property for investment purpose, and the income generated by that building, by that home, by that property, right, is the source of paying back the loan which I have taken from the bank. That is going to be a CRE loan. In the CRE loan, we are tend to provide lease agreement or say rental agreement or rent roll, right? Those kind of documents we need to produce to the bank to show our income source, or to justify the source of income, right? On the other hand, whenever there is a C&I loan, that means I can take a loan on a property, or I'm going to purchase a property for my office, for my factory, for a manufacturing. I want to set up a manufacturing unit. I'm taking a loan to buy property, but I'm not going to rent out that property to someone else, but I will be setting up my business inside that property. So the source of income will be coming from that business who is going to pay back to the bank, right? So those will be considered as C&I loans. Is that clear? Any question? Okay, very good. Now, there are a few more differences between these two types of loans. So, like, mostly one is the major difference, that most of the C&I loans will be for a shorter term, like 5 year or maximum 10 years, right? Whereas in the CRE loans, you will see 20 to 30 years are very normal terms, right? It could be 10 years as well, 5 years as well, but mostly CRE loans, it can be 30 years, 20 years, 15 years, 10 years, right? But maximum of the C&I loans are going to be maximum 10 years. I mean, it will get mature within 10 years, right? There is a differences between loans sometimes will be amortized for longer term, like for 30 years or for 20 years, but it will get mature in 5 or 10 years. That we have already discussed, right? So, but that is the one major difference. Other than that, most of the C&I loan will have a high principal amount, like value of the property is going to be high, so the loan amount is going to be high. And it is not only that C&I loan could be taken only on the property, right? C&I loan could also be on the, some kind of machinery which business wanted to purchase, some kind of equipment they wanted to purchase, some kind of new establishment, product, software, something they wanted to, they want to expand their business, right? So they can take a loan. Although these such loans are going to be, very, very high loan amount. Whereas CRE loans are not going to be so much high, less than most of the cases are going to be 600,000, 700,000, 1 million, 2 million maximum, that is, right? Not so much high. And term that we have already discussed. Other than this, mostly the, security that will be, given to the bank, that mostly is going to be the property, property will be put as a collateral against the loan, right? Whereas in C&I loans, not only property, but most of the loans you will see that even the equipments or inventories, these are also have been pledged as a collateral in the bank against the loan. Okay, I hope that the difference between CRE and C&I that has been clear to you, and but if you still have any questions, don't hesitate to ask questions, right? And that was what the end of the story. Okay, we'll meet tomorrow again, and we'll continue from here. Okay, thank you, take care.